All right, folks, happy Saturday. The crypto markets, the great thing about them is that they don't stop on the weekends. So it gives us crazy folks plenty of activities to do on the weekend, whereas the stock market is closed. It's just another one of the strengths, actually, of the crypto market. It's 24/7 money, 24/7 global liquidity, um, and it just never sleeps. It trades a lot faster. Anyhow, clearly this is the long. So this is the long-term chart. Back in 2012 over here in the bottom, and here's present day. We're looking like we're pretty much about to take out those highs at 20K and begin the next part of the bull market. And if we kind of think about, this was the one of the original bear markets of 2014. Here was a really long bear market, right? Of the past almost equivalent time frame. That was about 629 days. This was a longer bear market. So we're coming out, we're exiting the bear market. Now what we're trying to do is time the optimal places to get in on the dips. And I'm going to show you guys how I think about buying the dip. As you can see in the past couple days right here, we've had some serious breakout material. And we're always looking to see where the previous zones of consolidation were, the previous trading ranges, in order to define where the best outcome, the highly probable outcomes for dip buying activity to occur. And spoiler alert, I think that we're going to be coming down in the near term to probably, we'll have to see, how this bullish consolidation pattern holds up. I think we're going to go to the bottom of this consolidation range. It's a very, very bullish, strong uptrend that is just starting. So in that scenario, I think that we're going to find a lot of very, very eager bidders. And eager bidders are going to place themselves closer to the spread. And here's where the patient longer term bidders are, right? Down there in the 12Ks, 11Ks. So I'm going to clear everything here off the charts and just look for the logical place for some support to start getting in. I'm looking at it. I'm going to have to actually zoom into a shorter time frame in order to give you guys a little bit finer resolution. But I'm always looking at these volume pointed controls, right? So here's one of the original trading ranges from October. So that was when Bitcoin was basically trapped between 11,000 and 11,006, and once we broke out above that, as you could see, we just had this monstrous rip that again consolidated for a bit before another monstrous rip. So now we're looking to see where is the logical place to be buying the dip, the best value buys, and of course getting in at 11,300, that at that volume point of control from this trading range, the beginning of October, would be a really, really, really great place to get in. But if the market is truly showing a lot of strength, we could find some support actually here between 12,600 right down here, which would be the bottom of that trading range essentially, 12,600, and 13,800, which was the point of the breakout. So I'll write these numbers down of where kind of your highest probability areas are. 13,900 is going to be your first area where support should be showing up. The top of this trading range. Let me get this a little cleaner here. 13,900, the top of this trading range before the breakout. The bottom of that trading range, if we have a kind of a cascade of liquidations, I expect that cascade of liquidations to stop right down here at 12,700. Oops, 12,700. So that if you want to place your more aggressive trading, day trading bids right up here, that could be, a good spot. And if you're very good at managing your risk and all sorts of stuff like that, but if you're trying to get a longer term, better value buy, this is kind of in the near term. Where I think we might get to. If 12,700 goes, then we test this trading range right down here. Between, again, 11,800-ish and 11,200-ish. That would be where the next layer of support would be. I think that this was all very natural, organic buying. I think the crypto market has matured. I think Bitcoin's strength has just been undeniable across, all this weakness in some of the other markets. We're just seeing Bitcoin continue to grow in strength. And it's almost looking like, it wants to form a new trading range above this old trading range. We might not even get as low as 13,900. That's what's crazy about this move. So be careful. I would say be careful on a quick bounce back up above 16,000 essentially. That could be a big fake out if we get back up here in the near term to take us back down to the low of the range. And this is a really wide range, actually. I mean, it's an 8% range, which is pretty phenomenal. So the key is just be patient and don't get shaken out on these big panic dumps like we saw earlier today, which was a pretty steep one. The key is just looking for when the market does go low, slowly start to wade back in the waters and buy the dip when the market allows it. We are in a very bullish, again, long-term, just monster uptrend. And so in monster uptrends, you got to understand that the dips are going to be very, very short-lived because there's so many anxious buyers in the market. But when I'm just zooming out, looking really long-term, I look at, we found some resistance right up here, and we're trying to fill in all this volume because we have very little trading volume above, very little trading volume and very little trading history above this previous resistance at, essentially all the volume is right down here, right? See that? And we're now firmly trading above that, but we still need to fill in some volume in order to really break out above 20K with some confidence. So when I'm looking at this, I'm looking at, okay, well, where are the near-term areas of volume that have accrued? And you can see we popped out at, after we consolidated for about 3 months in the, high 9Ks, right through there, popped out, set a new trading range, popped out, and now we're coming back to test that trading range. We could go as low as this previous trading range. Right down here around 11,700. So that's kind of how I'm looking at it. This would be, if we do get back down below 12K, that's a screaming, buy the dip opportunity. I think that we, again, just to repeat, I think that, between 13,900 and 12,700, those are going to be your two high areas of probable support. But again, we are just in this monster uptrend. So long story short, it's going to be a buy the dip opportunity. Where you place your bids and how you manage your risk is up to you. But I hope you guys have fun and have a great weekend.